professional English for market color. Explain volume moves clearly. Welcome! In this micro lesson, we'll learn how to deliver credible market color. Clear, useful commentary on volatility moves. Your aim is to explain the move, not to entertain. Spell out what changed, by how much and over what window. Blend data, levels, percentiles, prints, with trader flows, who did what, to build a balanced view. Avoid hype and vague adjectives. Choose precise language that traders can act on. Always answer two questions: what changed and why it likely changed. By the end, you'll write concise notes that inform risk decisions and stand up to scrutiny. Use a simple template. Move right pointing arrow. Drive a right pointing arrow context. First, define the move, size, direction, and time frame. What moved, by how much, and when. Next, propose the driver, flows, catalysts, or positioning that plausibly explain it. Then add context, key levels, recent history, and the current regime to show whether it's typical or notable. Keep cause versus correlation explicit. Say what's confirmed and what merely aligns. This structure keeps commentary tight, reduces bias, and helps readers quickly judge whether the move is noise or something they should trade. Be specific. Name the asset, tenor, and instrument. For example, 1 MSPX implied volume or EUR USD 3M risk reversal. Quantify the change in BP, volume points, or percent, so readers can gauge importance. Time-stamp the action from 9:30 to 11 o'clock New York. If relevant, compare versus peers, e.g., SPX versus NDX, or versus history, e.g., 1-year percentile, to frame significance. Avoid adjectives like big or surge, unless you define them numerically. Precision builds trust and allows others to replicate your observations. Identify who is active: dealers, macro funds, RV funds, exporters/corporates. Specify the type of flow: hedging, relative value, gamma-related, overwriting, rolls. Provide evidence: trade prints, tickets, broker runs, or corroborated street chatter. Clearly separate confirmed flows, seen or ticketed, from rumors, indicated or suggested. Explain the link, how those flows could mechanically move volume or skew. When in doubt, state the limits. Flows appear consistent with, rather than asserting a cause you can't prove. Add the market context that shapes behavior. Mention key strikes, barriers, and supply pockets that attract hedging or overwriting. Place the move within the volume regime using 1-month/1-year percentiles to show if levels are rich or cheap. Note skew and term structure behavior. Did downside protection richen while the curve flattened or steepened? Comment on liquidity, depth, spreads, and whether conditions are thin or two-way. This context turns raw movement into a narrative traders can align with their risk and timing. Use verbs that match your evidence. Prefer appears, likely, consistent with, when causality is inferred. Flag certainty. Say confirmed for ticketed flows, indicated, or reported for unverified chatter. Avoid absolutes like caused by, unless you have direct proof. Cite sources or data points, quote prints, time windows, sizes, or percentile stats. Calibrate confidence. High confidence when multiple sources align. Low confidence when data are sparse. This disciplined language protects credibility and helps readers weigh your conclusions. 1 MSPX volume plus 1.2 PTS from 10:15 to 11 o'clock NY appears consistent with dealer hedging after 0 DTE demand increased gamma exposure. USD/3 million Japanese yen, skew softened by approximately 0.3 vols as exporters sold topside above 150, partial confirmation via prints. Move extends into supply near 25 delta puts. Liquidity thin, bid offer wider than average. Prints suggest RV funds rolling longs in EUR rates. Correlation uncertain with bond auction. Timing overlaps but causality unconfirmed. Use these as templates. Move first, then driver, then context, and end with confidence language. Before you hit send, 1. Report. Move right pointing arrow. Driver, right pointing arrow context, right pointing arrow confidence. 2. Quantify and timestamp every claim. 3. Differentiate. Flows versus catalysts versus positioning. Don't blur them. 4. Provide levels, strikes, barriers, and regime markers. Percentiles, skew, term. 5. Separate confirmed info from chatter and cite sources where possible. 6. Keep language precise, cautious, and evidence-backed. Do this consistently, and your market color will be trusted, actionable, and easy for busy professionals to digest.